Canada is making a bold move, mandating automakers to sell more zero-emission vehicles every year. This is a significant shift in national transportation policy, aiming to accelerate the transition away from gasoline and diesel-powered cars. The electric vehicle availability standard isn't a suggestion, it's a requirement. Automakers will be held accountable for meeting these targets, with penalties for those who fall short. By 2026, at least 20% of all new light-duty vehicles sold in Canada must be electric. This means that in just a couple of years, 1 in 5 new cars on Canadian roads will need to be zero-emission. The targets ramp up quickly, 60% by 2030, and by 2035, every new passenger car and truck sold must be zero-emission. The pace is ambitious, leaving little room for delay or hesitation. This aggressive timeline is designed to push Canada off fossil fuels and reshape its auto market in just over a decade. The goal is to dramatically cut emissions and modernize the country's transportation sector. The policy is among the most assertive in North America, putting Canada on par with leading European nations in California. It signals Canada's intent to be a global leader in clean transportation. The government hopes this will force automakers to invest in charging infrastructure and make EVs more affordable. More charging stations and lower prices could help convince more Canadians to make the switch. Automakers must now overhaul their sales strategies, production lines, and supply chains specifically for Canada. This means new investments, new partnerships, and a rethinking of how cars are built and sold. The mandate creates a unique set of rules for Canada within the integrated North American market. Companies will have to navigate different regulations on either side of the border. This isn't just a Canadian story, it's a move with ripple effects already reaching the US auto industry. American automakers are watching closely, as changes in Canada could influence their own strategies. For global car companies, it's a monumental challenge that demands rapid adaptation. The pressure is on to innovate and deliver new models that meet Canada's strict requirements. The aftershocks of this decision will be felt for years, both north and south of the border. It could even set a precedent for other countries considering similar mandates. Canada is betting big on a green future by regulatory force, not just consumer demand. The government is taking a proactive stance, hoping to drive change from the top down. The world is watching to see if this gamble pays off, and whether Canada's bold experiment can truly transform the auto industry for the next generation. Canada's new EV mandate is one of the most ambitious in North America, aiming to rapidly phase out petrol vehicles in favor of electric ones. This puts automakers in a bind, forcing them to rethink their entire North American supply strategy almost overnight. To avoid steep penalties, manufacturers will prioritize sending their limited EV supply to Canada, even if it means shortchanging other markets. But what about the petrol cars they can't sell up north? These vehicles, now unwanted in Canada, need a new home. They'll likely end up in the US, where regulations are less strict and the appetite for petrol cars remains strong. The US market, with less aggressive emissions rules, becomes a convenient outlet for these excess petrol vehicles, absorbing the overflow. This dumping could mean more petrol cars on American lots, often at discounted prices, making them even more appealing to budget-conscious buyers. For US consumers, this might look like a win. More choices, better deals, and a wider selection of vehicles to fit every need. But it could slow America's own EV transition, making petrol cars more attractive and affordable, and potentially delaying the shift to cleaner transportation. The paradox is clear: Canada's green push could unintentionally stall US electrification, creating a ripple effect across the continent. An influx of cheap petrol cars may undercut EV demand and complicate US climate goals, making it harder to meet emissions targets. It's a classic case of cross-border policy ripple effects, where decisions in one country have unexpected consequences in another. What happens in Canada won't stay in Canada. It's already shaping the American auto market, influencing what cars are available and at what price. The interconnectedness of the two economies means every move has consequences, and the future of both markets is more linked than ever before. American dealerships could soon see lots full of discounted petrol cars redirected from Canada. More inventory and lower prices might boost short-term sales, but there's a catch. A flood of new petrol cars could tank used car values, hurting dealership profits and recent buyers alike. Dealerships rely on a stable used car market. This imbalance could create financial headaches. Meanwhile, US automakers investing billions in EVs may find it harder to sell them if petrol cars are cheaper and more plentiful. Sales teams may push discounted petrol SUVs over pricier EVs, slowing the shift to electric. Dealerships are caught between manufacturers' EV ambitions and the reality of petrol-heavy lots. Investing in EV infrastructure becomes riskier if petrol cars dominate the market. The Canadian mandate, in effect, exports market volatility to American showrooms. For dealerships, it's a confusing, high-stakes balancing act. The future of the U.S. auto market is suddenly less predictable. For Tesla, Canada's EV mandate is both an opportunity and a challenge. In Canada, Tesla's all-electric lineup fits perfectly with the new rules, potentially boosting its market share. But in the U.S., a surge of discounted petrol cars could make Teslas seem expensive by comparison. Tesla must work harder to convince buyers of EV value when petrol cars are so cheap. The company faces fierce competition. Legacy automakers will ramp up EVs in Canada and push petrol cars in the U.S. Tesla's success depends on navigating this split market. Guaranteed growth in Canada, tougher price competition in the U.S. The company must double down on its strengths: innovation, technology, and long-term savings. Canada's mandate ensures a growing EV market up north, but the U.S. landscape is now more challenging. Tesla's path forward is a balancing act between two very different markets. North America's auto industry is a tightly woven web. Parts and vehicles cross borders constantly, linking factories and suppliers in the US, Canada, and Mexico. Every day, thousands of components travel back and forth, making the region's automotive sector one of the most integrated in the world. Canada's new electric vehicle mandate disrupts this delicate balance, forcing automakers to rethink how and where they build cars across the continent. Companies must now adapt their strategies to meet stricter requirements, which means retooling factories and shifting resources. More batteries and electric motors must be built for Canada, while petrol engines may be rerouted to the US, or even phased out sooner than planned. This shift requires new investments in technology and workforce training. This adds complexity and cost to an already intricate supply chain, as companies juggle new logistics and compliance hurdles. The USMCA trade agreement governs these flows, setting the rules for cross-border trade, but Canada's new rules layer on more challenges and uncertainty for automakers. Automakers must now juggle USMCA requirements and Canada's EV quotas, risking production bottlenecks and delays if they can't keep up with the changes. Mexico and Canada are America's top auto trading partners, with millions of vehicles and parts moving annually between the three countries, fueling jobs and economic growth. A disruption in one country ripples through the entire system, causing delays, shortages, and uncertainty for businesses and consumers alike. Canada's policy isn't just a local change. It tugs at the threads of the whole North American auto fabric, testing the strength of these cross-border ties. The industry's deep integration means every policy shift has continent-wide effects, shaping the future of manufacturing and trade in North America. The stakes for automakers and workers are higher than ever, as the industry navigates a new era of transformation and uncertainty. Not all automakers are cheering Canada's ambitious targets. Many warn the transition is too fast for current infrastructure and consumer readiness. Stellantis's CEO cautioned the mandate could destabilize Canada's auto industry if not managed carefully. Automakers fear financial penalties if they can't meet quotas, possibly leading to reduced investment in Canada. Ford and others highlight affordability. EVs remain pricier than petrol cars, even with incentives. A rapid shift could price out many buyers and spark backlash. Industry leaders say without major investment in charging, education, and affordability, the policy could backfire. The road to electrification is a high-stakes negotiation between government ambition and market reality. Canada's EV mandate is testing the USMCA trade pact that keeps North America's auto market running smoothly. If petrol cars flood the US, American officials may claim unfair dumping, sparking trade friction. The USMCA's 2026 review could become a battleground over Canada's policy and its cross-border effects. The US might demand changes or threaten tariffs, risking a trade war that would raise car prices and disrupt supply chains. Tariffs on Canadian vehicles could trigger retaliation, destabilizing the entire market. The core tension balancing national environmental policies with fair trade. At what point does one country's green push become another's economic disadvantage? Negotiators face tough choices that will shape the future of the auto industry and set precedents for trade and climate policy. The outcome will echo far beyond the car business. The next year will reveal how this story unfolds. Watch Canadian EV sales. Can automakers hit the 20% target? And in the US, will petrol car inventories and discounts spike? Pay attention to Washington's response. Will trade tensions escalate as the USMCA review nears? For consumers, keep an eye on car prices and incentives. There may be deals, but also volatility. Canadian buyers should watch EV availability and pricing. Americans, the flood of petrol options. Automakers' strategies will shift rapidly as they adapt to new rules and market realities. Canada's bold move has set the stage for a dramatic transformation in North American auto, and the world is watching.